We'll go in and take a look at that. You can see here we're seeing a pretty good little pop here in crude oil. Remember yesterday we talked about this area, this 54.40. Here on the this is right here on the 2-hour chart on the daily. Um, you can see here we had the 54.34. I think we mentioned that yesterday. Certainly we talked about it in the chat room, but this level right in here, and you can see that the market had paired back from that 54.34. 54.40 area. Here's on the daily. On the 2-hour, we had it up to 54.40. We peaked above it yesterday, and then certainly we've gone and worked down here, and you can see here where we're finding support here at 53.13. The low was 53.08. And we've seen a nice little rally come off of that. And actually a little bit of resistance here. If you look here on the charts, comes in right there at 53.56. And we actually just topped out at 53.55 here and see a little bit of a dip back here. Obviously, the big mover has been the gold market, and certainly we've had a big move overnight, actually just now into this, so bear with me one moment. Switched into that. And look here, we ran out, made it all the way up here, right at 1639. And if we look at some numbers that we're looking at, look at that, 1640 is 127% extension of this area. So came up just almost hitting there. We made it all the way up here to basically 1638.90, basically called 1639, and just $1 away from that 127% extension. We have seen the market start to pair back at this point. There we go. We'll go and spend some further time. Once again, we always take a quick look once we start up the show, and then we'll take a little bit closer look at the end of the show for gold as well as crude oil. Let's go on and move in, though, to FX. Yeah, we talked about the euro moving off of those flash PMI numbers, and certainly it has. With that, we'll go on and just review just a single, it's pretty light as far as the news story, and we'll just go on and cover that real quickly. And then we're just going to get on to the analysis. Okay, flight to safety leaves the yen behind as fears grow of coronavirus spreading. The yen was set for its worst week in 2.5 years on Friday as fears over the creeping spread of the coronavirus epidemic drove funds out of Asia and looking for safety in the US dollar, gold, and bonds. Though it barely budged on Friday, yen has lost 2% against the dollar in the previous 2 days due to weak Japanese economic data and coronavirus worries. China reported an uptick in infections from a virus that has already killed more than 2,200 people and paralyzed its economy. South Korea reported 52 new cases. Market participants are getting anxious over the spread of the COVID-19 in other countries, says Joshua Chua, emerging analyst with Citi in Hong Kong. The risk sentiment in Asia deteriorated rapidly, weakest most felt in emerging markets, Asia FX. Both are heavily exposed to China via trade and have lost 6% since the start of the year. The tourism exposed BAT has dropped 5.5%, while the Korean won and Singapore have shed more than 4%. Yet amid the flight that pushed gold to a 7-year peak as U.S. Treasury yields fell below 1.5%. The new case in South Korea and Japan have obviously given some people a little bit of the cold feet regarding Japan, and as the yen is a safe haven. They're thinking maybe the Swiss and gold are better, so there's a little bit of scratching of the head. There's no doubt about it. Meanwhile, factor activity in Japan suffered a steep contraction in 7 years this month. Should European Purchasing Managers Index show similar softness, which it has not, another round of dollar buy may be in the offing. The U.S. is simply exposed to any slowdown, less exposed to any slowdown in global trade. In terms of currencies, it's obvious candidate in terms of relative limited impact for the coronavirus. If your business takes fright at the coronavirus concern, that could be a fresh cause of dollar buying across the board. And we've seen crude oil drop off more than 20 cents now from that level that we were just showing there. So looking at that level on that 2-hour chart. But let's go on and move into the analysis here in FX. So bear with me. So let's move this on to the euro. So the euro remains pinned to the lows ahead of Friday's PMIs, which are expected to come out on the disappointing side. Support remains a weekly level of 776, followed by 726. Resistance is going to be 827, followed by 883. So the PMIs have come in a little bit better than what they would have expected. So 776 remains a low. And on the upside, we're looking at 827. Followed by 883. Here we go. And looking at the cable paired down to the prior day's bias chart support of 28.42. Actually, it looks like we had 28 or 29.38. I don't know where we had that. But anyway, that being said, a break lower will find support at 27.89. Resistance on Friday will be 29.25. So we've come off of these lows here. Remember, we had that 29.88 has been key on the way down, and we certainly slipped back, and the market opened itself to move even lower, which lowers what it did here. So, and obviously I don't know what had that mark, because look, you can see here the prior low was at 29.18. So obviously that was an error when I put that as 29.38. It was meant to be here, which is 28.42 or 28.38. And you can see here we're bopping off of that right now. So that being said, if we were to break lower, that would push us as low as 27.89. We're kind of mixed bagging it right now. Here's that, which was supposed to be listed in my part low, which was 28.42. I mentioned 28.38. I know I had that marked as 29.38 because the prior day's low was even lower than that. You see, I'm saying the close, so apologies, that was on my error. So I'll move that back, which was supposed to be there, 28.38. Let's say 28.38, not as that says 29.38. We'll go and keep that one there. Once again, on that lower move here, and on the upside, we were saying that resistance would be 29.25. We're going to stick to that. We're there right now, but we're just going to stick with that. little bit of short covering probably would not be bad. I'm saying and then we had, I think, beyond that we had 29.82. We'll actually allow for that. Hold on. You see a little bit better movement here. So the Aussie slid down to 66.19, which is 161% after the jobs report. The Aussie remains in a strong downward push and suggested a move towards 65.28. Resistance is 66.67. Well, the low so far has come in at 65.83, so I'm still going to mark for that big weekly support. We've shown it before. There's 65.28. So we're going to mark that for the potential to get to. And then we'll take a look here on the 2-hour chart. Upside's going to come in right there. 66.19 for resistance right now. And moving on to the Kiwi. So the Kiwi is holding the prior day's bias chart support level of 63.26. Obviously, we're just a little bit below that right now. Confluence was 63.23. Resistance is going to be 64 even. So we're staying here. Hey, look, this is the support still remains right here, which was said the 63.23. We've dipped a little bit below that. There's just this one line area here. Beyond that, which potentially we could see 62.86. We're going to go on and give it a little bit benefit of the doubt, considering how woeful these pairs are. I'll tell you what, we're just going to go right here, which we've got some buying coming here also, and just go with these lows for the day that have been in place right now, which is going to be 63.02. And let's take a look at some resistance. Coming in right there, right across here. Not expecting a whole lot on this Friday as these markets are right at their lows. It's going to be 63.33. Actually, let's see here if they can pull a bit. Yeah, 63.23. Not expecting a whole lot. $63.33. Take a look at the dollar CAD. The dollar CAD found bids at the low, rising back to the treading water level because we have been able to find any real movement in the same. We've kind of been up and down, but we've been stuck in this area. Not a whole lot of movement overall. Maybe a little bit of up and down, but just like I said, called treading water. Resistance on Friday will be 32.81 with support at 32.30. Then moving into the dollar peso. We saw a pretty good reaction overnight. Finally garnered some ground, but since the dollar peso finally caught some traction on the backdrop of sliding equity prices, resistance on Friday will be 18.92, followed by 18.98. Well, looks like we stopped. Look at that. Boy, we blew all the way up here. Like I said, we gained some further movement overnight. We made it all the way up to 1901. And resistance here is going to be 1904. So that certainly exceeded that. Hold up. Finally, like I said, gained some traction. 1904. If we can push higher. That might be a stretch here. But still, the equity prices are still suspect. And support is going to be, at this point now, right here, coming across the board, right there. 1887. And with the dollar yen closed above the bias chart resistance level of 1187. The pair does not seem interested in a pause, and Friday's resistance is going to be 1250 with support at 1136. Here's at 1187. Thought we might have taken a bit of a pause there. We are a little bit lower right now, but certainly this market has the ability to move even higher. But they are struggling now a little bit, this 1187. But resistance. We get all the way right in here, right there. We can be a little bit more reasonable here, which would be 1218. Looks like that's where the market kind of found some struggle right there. So you can see right there, 1218. And 1135. I think we had marked this 1136. And let's go move into the cash dollar index. The cash dollar index, Dow index is keeping the pressure on. Resistance remains 99.92, followed by par 36 with support at 99.44. Well, you can see right, they're coming up not too far above 99.44. The index is overdone, but taking the other side has been futile. At this point, it's all about the level. So, but once again, we're going to stick right there with on the upside 99.92 and on the downside 99.44. We're going to move into the cross rates. Okay, the Kiwi yen, you can see here we've turned around and rotated lower here after this move higher, and the market kind of tapped out here at the 7102, 7104-ish area here, and now we've turned around just giving all this back. Obviously, concerns with the yen is strengthening a little bit, and obviously ongoing concerns with the antipodian currencies, the Kiwi and Aussie. So support's going to come in right there at this level. You can see that. We'll see whether that tries to take it out, but certainly in the short term is going to provide some support, which is going to be 70.28. And being under pressure, we're going to take a look at it on a 2 hour, see if we can see something a little bit closer. Right there. It's going to be resistance. I doubt it'll be making anywhere close to that, but that would be resistance up there. 70, 77. And moving into the euro yen. Well, we've seen this market move higher, and previously we had a resistance here from yesterday, 2096. The market got up as high as, with the yen weakening, got up as high as 2137. We're still right here at the 2096 area here. Potentially the euro could strengthen a little bit further, so we want to give it a little bit of extra room, I should say. We're actually going to have our resistance coming right across there. You see here? Right across the zone here. It's going to be 21.19. 21.19 for today. And support right here coming across here. And that's going to be, which is just below the day's lows, which would be 20, call it 2020. And let's go move into the euro odd. Last day of the week is just a matter of just looking at these levels, seeing what the market can potentially move to. Certainly, as we mentioned, the euro is strengthening on the backdrop. I mean, well, not on the backdrop, but I'm saying when you look at, and then the two ships going in different directions in the night, which is the Aussie plummeting and also the euro correcting. But when you compare these two, certainly you see a much stronger move here. We can go in and take a look here on a fib. So we're right up here against the 61%. We know that the euro can strengthen a little bit further. So 64 is a 61%. Right here, we'll go with that level right there, which is 64.25. Good movement there. With support, pretty clear what that is right there. 63 even. We want to give it a little bit more room because we'll just move it just a bit higher here, which is going to be, right there. 63.21, 63.21, call it 63.22. And moving on to the Euro Kiwi. Same here, Euro making some good advances against these weakened antipodian currencies. can we push a little bit higher? Certainly we can. And we're just looking once again at the technical levels. It's the end of the week. How far can they stretch it? Technical level comes in right there. You see that? 71.69. And support. I think we can go a little bit better than that. Right here, you see these touches coming across right there, here, right there. So it's going to be 70.80. Oh, we do have UK data at the bottom of the hour. You can see here we have the guppy, the sterling odd, as well as the pound. We're going in flash PMI is going to be 52.8. That's composite with manufacturing 49.7 and services at 53.4. So let's see how that number comes out. We actually remember we had our resistance right now at 29.25, followed by 29.82, which remember that's that pivot. Let's see how we react there. 15 seconds for the data. Once again, flash composite 52.8 with manufacturing 49.7 and services at 53.4. $51.9 saying, but the composite I'm seeing here is 53.3. Oh, for the manufacturing, yes, 51.9. A little bit of move here. Here's 29.25. That's our initial bias chart resistance, and the market's really not doing a whole lot with that. We're seeing the guppy move a little bit higher here, and starting now to continue to strengthen a little bit further. We'll get to the analysis in that in a moment. But you can see with the pound, 29.25 is our bias chart resistance here. We have a secondary at the pivot, but with not really much of a change here. Struggling right there at 29.25, our bias chart resistance. Let's go and move this on. Let's go and complete this analysis. Once again, just to go over this rather quickly, 53.3 for the composite, 51.9 for the flash manufacturing, and 53.3 for services. Let's go and move on to the Aussie yen. UK data seeing disruptions affecting the supply chain here in this clock, affecting the supply chain per disruptions with associated with the coronavirus. That's how some notations come out in regards to flash PMIs out of the UK. So once again, situation with coronavirus is disrupting some supply chains, showing some impact on the numbers. Anyway, that being said, let's go and move on to the Aussie yen. So we've seen the yen, because it did go on in strength, and we've seen a dip back in here, a slide. I wouldn't get too overdone with this. Once again, you can see here the support level coming in right there. This prior open here, that's going to be support. So that would be 73.46. Resistance right there, 74.02 today. As I mentioned, as we get into the last day of the week, it's just all about the levels. You know, let's move into the guppy. So we continue to move a little bit higher in the guppy, but once again, sterling hasn't been. We've seen a little bit better strength against the guppy, but the pound just looking pretty sluggish. Sterling odd. We'll see what happens there, but I think we've kind of pushed the extremes here a bit, at least for today. We shall see. Let's go and take a look at the 2-hour. Just right there. I mean, there's some pretty good resistance. We're going to go with that. 44.52 coming across there. 44.52. Not too far away from it. Support will be the key level here, which is the 43.80. That'll be support. You can even make the case here around 44 even, but we'll list it as 43.80, the major level. And we'll finish up with sterling odd. Well, once again, with the weakness that you've seen here in these antipodian currencies, the AUD and the Aussie, you've seen this gain even further here, and it's done just that. As we've continued to move higher. Remember, we broke out this triangle. Support was going to be right down in here we had from before. We may have moved it up since then, and that's where we get back to, and then we've added on, gone beyond the 94.83, which is a key weekly level. Certainly nothing to be downplayed. Let's go and take a look here on the 2-hour chart, see if we can see a little stretch point. There you go, right there. See that? Right there coming across, which would be 96.14. So put that in there. Right there. There you go. Caught 96.15. That'll be in our bias chart resistance. Should run into some trouble up there. And support, I think that's pretty clear right there. 95.08. We can probably work that a little bit higher right there. You see here? Right there. Cleared that. That's going to be support. 95.38. Still well above that key weekly level, and I would expect the market to retain that here. Look at that key weekly level, 94.83. That wraps up the FX. We'll go and touch base right now with the crude oil as well as the gold market. Let's go and move into the crude oil. I don't know how much we shared yesterday in the crude oil, but in the chat room we did talk about, I'm sure we did talk about here in the room also, I mean here in the analysis, the 54.40, you can see here on a 2-hour chart, confluence in here on the daily with 54.34, and certainly I shared that with, in the chat room, but you can see right there was that level, the 54.30 on the daily. We talked about, look, the bears were wrong here. We talked about this on the weekly level. As long as we close above 52.84, you've confirmed this bottom with a tweezer bottom here. Went sub 50. Bears were completely wrong on this. Let's go on here. We got to that 54.40. On the daily, I think on the daily we had 54.34, and on the 2-hour chart 54.40. Look where they come down to support, right down here at 53.13. When we came on there, where were we? We just made it up. We were just rallying. We had a pretty nice rally here, and actually it was at the release of these European PMIs, Eurozone PMI, and I said, well, we're right here at this resistance, which is 53.56, and right there, that's exactly where we stopped. And look, the market has come all the way right back down to 53.13, or just about, to come back and revisit that here on that. We'll see. I mean, this is a key area here. If you're looking for any additional support, it's going to come in right there, moment, which would be 52.93. And we've already talked about that it's important because here which worked out perfectly. Look at this. Well, it's just 52.84 is that level. If we can get it close above 52.84, then we confirm this bottom in place, that tweezer bottom here. So I would think the market will try and hold it. We shall see. But we had talked about that yesterday, as this being an area that we talked about as an area for them to pause, which was we were looking on the daily 54.34, which was confluence here on the 2 hour, which was 54.40. We got up as high as 54.65. They did press it a little bit higher, but you can see how much we've come off here. Okay. Let's go and move into the gold market. Obviously, the big stalwart mover for the day. Move this out of the way. Okay, so we did go and make it here. If you were with us at the beginning of the show, we did make it up to 1639. If you look here with some analysis that we did overnight, 1640 is the 127% extension of this move here. Pull this back. Right there, you see that? So it gave us a target to go for. And right now the high's been 1638.80, or basically 1639. So basically hit this thing here. Then we saw the market go and pair back down here to 1634 right here. If you look, you're thinking, okay, well, was that some kind of support? Yeah, it sure was. You can see that coming right across here. Right there. You see there? Right there. There you go. See? There we go. Resistance coming up if you were to see for right now, but once again, definitely wouldn't be trying to play this for the short side, although I think certainly at this point when it reached there at 1639, certainly $1 away, and you can see here as the market dips back, comes back to challenge it here, and you can see right there we're having the trouble there, and then we see that nice dip back down, basically a $4 pair back. But this would be exactly where you'd have the same trouble if they come up here around this 1638.25 area here. Certainly the market is still poised to move higher, but those are the levels that I was looking at. I was looking at really coming into this morning, I was looking at 1633 followed by, and if you look at this, you take a look here also, potentially up here at 1650, which is 161% of the move from 1459 to 1578. We shall see, but we've reached some key levels here. I thought the market in Asia would take a pause at 1633, and you see that right there coming across. I'll show you there. Right there, you see 1633. I thought it would take a pause, maybe dip back, and then reassert itself in the U.S. session to make a move to 1639. When we made it up here to 1633, you see there the market kind of ran, I wouldn't say ran out of gas, but kind of stalled here at 1634, dollar above that 1633. We dipped back, we kind of held. I was already asleep at this time, but they kind of held, and you can see the same thing. It was just just kind of a move a little bit higher, kind of teasing this market. Look at that as we got here into 30, just moving a little bit higher, same thing. And those that try to short this market at that time were really being stung here. I thought, like I said, we'd make it up to 1633. But like I said, by the time it made up there, I was snoozing. And then we made up to 34. Once again, tease the market with a dip back for about $1, stuck here, and finally we make this move up here, which, as I said, when you look at it here on the daily, 1640 is 127% extension. We take a quick dip back of about almost $3, make this one more challenge of a new high. If you pair this back out, then you see, look how this is one quick dip and then a real big fly up here to 39 even, and then quick back. So that kind of tells you, okay, now this market is susceptible. We get that dip back here to 36 off $3. We rally back, and this is where you know they're going to have trouble. Right there at 38.5, they make it up to what, 38.2, and then from there we see a good $4 move. So this is where they're going to have some trouble at, we said, right around 38.25. But once again, we've already had the move now. Now we're going to see whether they can push even higher. But kind of already, at least as far as I look at it, it's kind of already shot its wad now, because this is the move I was going to expect here in the U.S. session. Anyway, that being said, thanks for joining us here on the European crossover webinar. For those that are premium subscribers with ForexAnalytix, you do have the opportunity to beta test our patterns in play, which is if you use MetaTrader 4 or 5. If you do use MetaTrader 4 or 5 and are a premium subscriber and you're interested in beta testing the patterns in play, whether it's on your live account or you're on a demo mode with MetaTrader, just simply email support at ForexAnalytix.com. Thanks for joining us. Have a good trading day and great weekend too.